Hello everyone. Welcome to this week's free market analysis. Today, 2025 March 3rd, we will talk about free weekly signal analysis, Ethereum, dollar index, WTI crude oil, and Dow Jones. We'll break down the potential movements this week and what driven by key macroeconomic events and inherent market timing factors. Now, let's examine the fundamental drivers combined with market timing signals that are most likely to shape EthUsd's direction in the coming week. Eurozone inflation data, early week volatility. Potential. The week's trading will likely open with a focus on inflation data coming from the Eurozone. Should this data reveal stronger inflationary pressures than expected in Europe, we could see an initial boost to EthUsd early in the week. This is due to the potential for a relatively weaker US dollar in comparison to a potentially strengthening euro. Be prepared for possible volatility around these early week data releases. US economic data, midweek, key dollar driver. Midweek will shift market attention squarely to the United States with the release of critical manufacturing PMIs and employment data. Robust figures in U.S. manufacturing and a strong labor market, if reported midweek, historically tend to strengthen the U.S. dollar. This dollar strength could then exert downward pressure on EthUsd. Conversely, weaker U.S. economic data at this time may relieve dollar strength and potentially allow EthUsd to gain upward traction. Time your trading awareness around these midweek releases as they represent key timing points. Late-week central bank policy signals, potential trend setters. As the week progresses, the focus will turn to central bank policy. The European Central Bank's interest rate decision and subsequent policy statements will be important. A dovish signal from the ECB, suggesting a move towards easing monetary policy, could weaken the euro and indirectly strengthen the dollar, potentially weighing on EthUsd as we approach the weekend. Conversely, a hawkish ECB stance would be euro-supportive. Furthermore, keep a close watch on Federal Reserve Chair Powell's speech on Friday. Hawkish comments reinforcing a higher-for-longer interest rate outlook in the U.S. are likely to bolster the dollar, potentially limiting EthUsd's upside or adding to downward pressure at week's end. Dovish remarks, suggesting possible rate cuts, could weaken the dollar and offer support to EthUsd. The latter part of the week, therefore, becomes a crucial timing window for potential trend shifts based on central bank messaging. In summary, EthUsd's price this week will primarily be shaped by the interplay of scheduled fundamental economic data and inherent market timing. The key economic releases from both the Eurozone and the US regarding inflation and employment, along with central bank policy signals, will be the dominant drivers. Traders should anticipate possible periods of increased volatility coinciding with these data releases as the market reacts and adjusts to these macroeconomic and central bank cues. Second, let's examine the key fundamental drivers and market timing signals expected to guide the US dollar index this week. Eurozone inflation data, initial DXY reaction. Trading at the start of the week will likely react to the Eurozone's latest inflation figures. Weaker than expected inflation data from Europe at the beginning of the week could exert upward pressure on the US dollar index. This is because softer Eurozone inflation might suggest a relatively stronger US dollar in comparison. Anticipate potential volatility in DXY around the release of these early week European inflation numbers. U.S. economic data, midweek, core dollar strength indicator. The middle portion of the week will bring critical U.S. economic data into focus. Pay close attention to the releases of the manufacturing PMIs and the U.S. labor market report. Strong U.S. manufacturing data and positive employment figures released midweek are typically supportive of the U.S. dollar index. Historically, robust U.S. economic data at this juncture tends to reinforce dollar strength. Conversely, any weaker than anticipated U.S. economic data during this midweek period could temper dollar strength and potentially lead to a temporary pullback in the U.S. dollar index. Be prepared for potential timing-related price movements around these key midweek economic announcements. Late-week central bank policy signals, potential directional shift. Later in the week, central bank policy signals will become increasingly influential. The European Central Bank's upcoming interest rate decision and any accompanying policy statements will be closely watched. A more dovish stance from the ECB, hinting at possible monetary policy easing, could weaken the euro and, consequently, lend support to the US dollar index. Conversely, a hawkish ECB stance could strengthen the euro and potentially weigh on the dollar index. Furthermore, Federal Reserve Chairman Powell's speech on Friday presents a significant event risk. Hawkish remarks from Powell, reiterating a commitment to sustained higher interest rates in the U.S., are likely to further buoy the U.S. dollar index, possibly limiting any downside or even driving it higher towards the week's end. Dovish comments from Powell, on the other hand, could weaken the dollar and potentially allow the U.S. dollar index to correction or reverse some gains. The latter part of the week, therefore, marks a crucial timing window where central bank communications could dictate the directional bias of the U.S. dollar index. In conclusion, the U.S. dollar index's performance this week will be primarily determined by the dynamic interaction of scheduled fundamental economic data and cyclical market timing factors. Key economic data releases, specifically concerning inflation and employment from both the Eurozone and the U.S., in conjunction with central bank policy signals, will be the predominant drivers. Traders should anticipate potential periods of heightened volatility around these scheduled data announcements as the market interprets and reacts to these macroeconomic and central bank cues throughout the trading week. Then, let's examine the essential fundamental drivers and market timing cues expected to shape U.S. oil's price action this week. Global economic data, broad demand driver. U.S. oil's price this week will be significantly influenced by broad global economic data releases. Keep a close watch on manufacturing PMI data from major economies and overall global growth indicators released early in the week. Stronger than expected global economic data, especially from major consumers, can signal increased demand for oil and typically provide upward pressure on UsOil prices at the beginning of the week. Conversely, weaker global growth figures may dampen demand expectations and could lead to early week downward pressure on UsOil. Pay attention to timing. These early week releases can set the tone. U.S. economic indicators, dollar and demand. Influence, midweek. The focus will then shift to the United States midweek, with key U.S. economic indicators taking center stage. Specifically, monitor U.S. manufacturing PMI and the crucial U.S. labor market data releases. Robust U.S. manufacturing and employment numbers released midweek are generally supportive of the U.S. dollar. While a stronger dollar can sometimes exert complex pressures on commodities, strong U.S. economic figures also imply healthy demand within the U.S., a major oil consumer. Positive U.S. data, therefore, can have a mixed but potentially net bullish influence on UsOil around the midweek mark, driven by demand optimism. Weaker U.S. economic data, on the other hand, could signal demand concerns, leading to potential timing-related downward pressure. Crude oil inventory data, supply-demand balance. A critical oil-specific data point to watch midweek is the U.S. crude oil inventory data. A larger-than-expected draw in crude inventories typically signals stronger demand or tightening supply, which can be bullish for UsOil prices around the release time. Conversely, a larger-than-expected build in inventories suggests weaker demand or oversupply, potentially leading to downward pressure on UsOil midweek. This data release is a key timing event for oil traders. OPEC plus news and geopolitical events, supply-side shocks. Throughout the week, and particularly towards the latter half, remain vigilant for any news headlines related to OPEC plus production policy or unexpected geopolitical events that could impact oil supply. Surprise production cuts from OPEC plus or escalating geopolitical tensions in key oil-producing regions can create sudden supply-side shocks, often leading to rapid upward spikes in UsOil prices. Conversely, signals of increased OPEC plus production or de-escalation of geopolitical risks can ease supply concerns and potentially exert downward pressure. These events are inherently unpredictable in timing, but their potential impact on UsOil is substantial, particularly as the week progresses. In summary, U.S. oil prices this week are expected to be primarily driven by the interplay of global and U.S. economic data releases, crude oil inventory figures, and the ever-present potential for supply-side shocks from OPEC plus news or geopolitical developments. These fundamental factors, combined with inherent market timing related to data releases and news flow, will be key determinants of UsOil's price trajectory throughout the trading week. Traders should be prepared for potential volatility around these key timing points as the market reacts to evolving supply and demand dynamics. Last, let's examine the crucial fundamental factors and market timing signals expected to influence the Us30 index this week. U.S. economic data, broad market sentiment driver. The overall trajectory of the Us30 this week will heavily depend on key U.S. economic data releases. Keep a close watch on the breadth of U.S. economic indicators, starting with manufacturing PMI data and extending to crucial consumer sentiment figures released throughout the week. Stronger than expected U.S. economic data generally fuels optimism about corporate earnings and economic growth, which can be bullish for the Us30, particularly at the beginning of the week as markets react to initial data flow. Conversely, weaker U.S. economic data can trigger concerns about economic slowdown and corporate profitability, potentially leading to early week downward pressure on the Us30. Time your market awareness to these releases. U.S. labor market report, key midweek. Event midweek, the spotlight will intensely focus on the U.S. labor market report. The non-farm payrolls, NFP figure, alongside the unemployment rate and average hourly earnings, are historically significant market movers for U.S. equities, including the Us30. A robust U.S. jobs report indicating a strong labor market typically boosts investor confidence and can drive buying interest in the Us30 around the midweek point. Conversely, a weaker-than-expected jobs report can raise economic concerns and potentially trigger selling pressure in the Us30. This midweek data release is a critical timing event for index traders. Federal Reserve policy signals, late-week monetary policy. Influence. As the week progresses towards its conclusion, Federal Reserve policy signals will become increasingly influential. Pay close attention to any scheduled Fed speeches or releases of Fed minutes that might offer clues about the central bank's future monetary policy path. Hawkish signals from the Fed, suggesting a continued commitment to aggressive inflation control through sustained high interest rates, can create headwinds for the Us30, potentially limiting gains or even inducing downward pressure towards the week's end. Conversely, any dovish signals from the Fed hinting at a potential shift towards a more accommodative stance or possible future rate cuts could be viewed positively by equity markets and provide late-week support for the Us30 index. The latter part of the week is a key timing window for potential directional shifts based on Fed communication. In summary, the Us30 index this week is expected to be primarily governed by the interplay of scheduled U.S. economic data releases and recurring market timing factors. Key economic data points, particularly regarding overall economic sentiment, labor market strength, and Federal Reserve policy signals, will be the dominant drivers. Traders should anticipate potential periods of heightened volatility around these scheduled data announcements as the market interprets and reacts to evolving macroeconomic and monetary policy cues throughout the trading week. And that concludes our weekly market overview for Ethereum, Dollar Index, WTI crude oil, and Dow Jones. As we've explored, the price action for this instrument in the coming week is expected to be significantly influenced by a dynamic combination of fundamental economic data releases and recurring market timing patterns. We've highlighted the key economic reports and central bank signals to watch for and how these factors could shape the market's direction. If you found this analysis insightful and helpful for navigating the week ahead, please give this video a like and subscribe to my YouTube channel for more in-depth market analysis and forecasts delivered regularly. Stay informed, trade wisely, and I look forward to sharing more market insights with you next week. Thank you for watching.